lot of business owners use tax prep and tax planning like those phrases mean the same thing. Then March or April shows up, the tax bill hits, and the numbers feel bigger than expected. In this video, you will learn the difference between tax prep and tax planning, why each one matters, and how to build a simple rhythm so tax season feels calmer instead of chaotic. My name is Clenney, and I'm a licensed CPA in Montgomery, Alabama. I work with business owners who want bookkeeping and taxes handled together so the decisions come from real numbers instead of guesses. What you hear today is general information, not personal tax advice. Your situation always deserves its own conversation. Let's start with tax prep. Tax prep sits at the end of the story for a year. 12 months have already happened. Income came in, expenses went out. Bank and credit card statements show the full picture. During tax prep, a professional gathers information, organizes it, and files your federal and state returns. Strong tax prep keeps you in good standing with the IRS and Alabama, helps you claim deductions and credits you qualify for, and clean up reporting so the return matches what actually happened. One key detail lives under all of that. Tax prep works with a year that already closed. Revenue is finished. Purchases already happened. Choices around estimated payments were made months earlier. A few items may still be flexible, such as certain retirement contributions, but the list is short. So tax prep is important, but it looks backwards. Now bring tax planning into the picture. Tax planning helps while the year is still in motion. Numbers are reviewed before December 31st. In some cases, planning check-ins happen more than once. Planning uses existing tax rules and applies them to your real situation on purpose, not by accident. During a planning session, you and your tax professional look at year-to-date income, expenses, and profit. You review what has already been paid in through withholding or estimates. You talk about what is likely to happen in the remaining months. With that view in front of you, you can look at options while there is still time to choose. For example, planning may involve a conversation about equipment your business already needs. A laptop may be failing. A piece of machinery may be at the end of its life. Planning helps you decide whether the timing of that purchase fits this year or next year, and how the choice affects both taxes and cash. Planning may also involve retirement contributions or adjustments to estimated payments, so April feels more predictable. Tax planning does not erase tax. Planning gives you informed choices while the year is still open, instead of one rushed decision in the spring. A lot of confusion between tax prep and tax planning comes from 3 places. First, timing. Plenty of owners only see a tax professional when a deadline is close, a return is due, a notice hits the mailbox. Everything tax related gets packed into one short appointment. The meeting carries both cleanup work and strategy, which is a lot for 1 hour to hold. Second, language terms like tax prep, tax planning, tax advisor, and CPA blend together from the outside. Some firms focus almost entirely on preparation and filing. Other firms build planning into ongoing relationships. With a clear explanation, it is easy to hope for planning while only receiving prep. Third, bookkeeping. Planning depends on current, accurate numbers. Prep can still happen when books are a mess, even though the process feels a lot heavier. Planning needs enough structure to show what is really happening in the business. When books fall several months behind, profit becomes hard to see. Income may not be fully recorded. Expenses may still be vague in categories. Bank and credit card accounts may not be reconciled. A tax professional can still prepare a return, yet planning at that point turns into guesswork. Owners feel that gap as stress. Imagine walking into a spring appointment and saying, "I want my tax bill to go down." The tax professional asks for a current profit and loss report. The honest answer sounds like, "My books are not up to date." From there, the conversation shifts away from future decisions and moves into basic cleanup from the past. None of that means you failed as a business owner. It simply shows how bookkeeping, planning, and prep fit together. Bookkeeping records what happens in the business. Tax planning uses those records while the year is still open. Tax prep reports what happened to the IRS and the state. Once that order feels clear, it becomes easier to design a simple rhythm for your year. Once practical rhythm looks like this, during the year, keep books current, income and expenses are recorded regularly, bank and credit card accounts are reconciled, reports and your bookkeeping software line up with the real balances in your accounts. You can do this yourself or hire help. The habit matters more than who presses the keys. Around the middle of the year, schedule a quick check-in. A mid-year snapshot shows how revenue and expenses are trending. You can talk about changes such as new hires, lost clients, or major purchases. A short conversation here can flag problems early and guide estimated payments before they drift too far from reality. In the fall, schedule a deeper planning session. By September or October, the shape of the year is visible. Profit for most of the year shows up in your numbers. With that information in front of you, you and your tax professional can talk through your year end when it moves that still makes sense instead of rushing in December or regretting missed chances in April. After the year end, move into tax prep. Books are finalized. Reports go to your tax professional. Returns are prepared. Question gets answered. And remaining moves that still apply for the prior year, such as certain contributions, are handled. That rhythm turns tax season from a crisis into a review. A few questions usually come up at that point. One common question sounds like this: can tax prep still help me, or is everything locked in? Tax prep still matters a great deal. Careful prep can uncover deductions and credits that fit your situation, correct mistakes, and prevent from paying more than required. Prep cannot change decisions that happened in the middle of last year. Yet it can make sure the story that reaches the IRS is accurate and favorable as the law allows. Another question sounds like, planning, really? Does it really matter to me? My business is not very large. Does planning still help even with those smaller numbers? Planning might look like building a simple estimated tax schedule so April doesn't bring a shock. Planning might involve deciding whether retirement contributions fits your budget. Planning might involve checking whether your current entity structure matches your income and your risk level. Dollar amounts may be lower, but stress relief can still be significant. A third question focuses on experience. What happens inside a planning session? Planning usually feels like a practical conversation, not a lecture. You bring your current reports from bookkeeping. You and your tax professional look at income, expenses, and profits for the year so far. You talk about what changed, what might change, and what you want over the next few years. Together, you walk through options and how each one touches both taxes and cash. You leave with a short list of steps that fit your business instead of a generic checklist. At that point, a lot of owners realize something important. Up until now, the only thing they have experienced is tax prep. Planning has never had its own space. Once they go through planning, even once the difference between the two becomes obvious. If you run a business in or near Montgomery, Alabama, there is a simple way to experience planning without building the process from scratch. Right now, I'm offering a free year-end tax strategy session through December 22nd. During this session, we sit down with your numbers as far as they are updated and walk through this year together. Focus stays on your business and what is actually happening. We review income and expenses for the year so far, talk about large purchases you have already made, look at estimated payments, and check how to choose those payments, how those payments still sit for your final bill. We also look for deductions and opportunities that still make sense for this year. By the end of the session, you will walk away with 3 things. You will understand where you stand for the current year. You will have a short list of action steps that still make sense before December 31st. You will see what needs to shift in your bookkeeping or your habits so the next tax season feels more under control. This session does not lock you into any long-term commitment. It simply gives you a chance to experience planning instead of only tax prep. Business owners in and around Montgomery who want to schedule a free year-end tax strategy session can use the link in the description of this video. After you fill out the short form, my office will follow up with available times and next steps. And if this video helped you see your own situation more clearly, tap like, share it with another business owner, and subscribe for more practical tax and bookkeeping content.